A little over a decade ago, the Department of Labor released new guidelines for 401k retirement plans to provide full disclosure to the participants of the plans over exactly what expenses are being paid within the program. So it would be fully transparent. So when someone was looking at the investment options in the plan and so on, would be able to really make an educated choice. But the Department of Labor released this under a code known as 408B2, otherwise known as fee disclosure. And this really became important because it put the fiduciary, which is normally the sponsor of the plan or the business owner that is offering this 401k program to its participants and its employees, to require them to fully investigate and know exactly what the expenses are related to the plan that they are offering to their employees. This became quite an issue over the course of the last decade, in that once all the companies had to fully disclose what their fees were, we saw where there were a lot of hidden costs that weren't being communicated to the employees. And this put the burden of reducing these costs on the employer, and realizing that as a fiduciary sponsoring these plans, it is personal liability, and there were penalties if a company did not adhere to these rules. So over the course of the last decade, companies have really gotten a lot better at disclosing these costs. And these are related primarily to the investment options that are inside the plan, the fees that they're paying for record keeping and administration, and so on. Now, when it comes to the investment options, there's always expenses that are built into a mutual fund or an exchange-traded fund that is part of a typical 401k plan. But when you start to look at the other expenses that are related to the program, how much are loans, how much is the annual administration, the record keeping, things along those lines, it became a little bit of a challenge for fiduciaries to really understand what these expenses are and how best to compare them to other expenses in the market. And one of the requirements under 408B2 was that a plan sponsor had to every year benchmark their plan against the market to confirm that the fees that they were paying were average or below average for that particular size plan. Now, again, the only way a lot of companies were able to do this was to actually put out to the market RFPs, requests for proposals, from alternate providers to really get that information and then do a cost comparison. And this was very cumbersome, and it became a big problem that sponsors really were then disclosing to the world what their plan currently had, and also what the options that they were going to be delivering to their employees if it was the most cost effective. Over the last 5 years, a database was created of these plans and the sponsors that are out there, and essentially allowing us to create what we call a plan benchmarking